Thank you very much for coming. This is probably the largest audience that's ever happened in this space for a panel session on regulation. So it obviously is a very hot topic. I'm going to introduce the panelists today. We've got at least 2 lawyers in the room, I think, possibly 3. Are you a lawyer?
Yeah,
I am.
You ran 3 lawyers, okay, and they're not charging today, so that's a bargain. So, Soala, Orupabo.
Yeah, I'm Soala. I work in regulation, compliance, and licensing for Diacle, and I also do marketing for ICOs and do a kind of end-to-end kind of service for them.
Hi, I'm Sheree, so lawyer as well. I'm currently working for Bitcar, and I do legal and marketing.
Hello, my name is Julian Zegelman. I've practiced corporate and securities law in Palle for over a decade. I'm also a partner at TMT Crypto Fund, which is a publicly traded venture capital fund focusing on blockchain technology. And coincidentally, we're actually publicly traded here in London on the London Stock Exchange.
Great, thank you. My name is Shone, Anstey. I'm the executive chairman of Blockchain Intelligence Group. We actually are a public company trading on the Canadian exchange. We recently went public in December, raising $20 million. We trace, track, and monitor cryptocurrency. We work with law enforcement agencies in Washington, D.C. We've been in the business for quite some time. We've been in crypto since 2011, 2012. We have an excellent team, and we'd like to share our insights into how the regulators that we deal with see things.
Okay. We can't emphasize too strongly how important regulation is. From our perspective, as in my company, Coinsilium, regulation means certainty. And for any business, you have to have a degree of certainty so that you know that what you're going in to do every day when you're working and what you're trying to create, you've got the confidence that nothing is good. Well, you know, there's always risk, but you want a fair degree of confidence that what you're doing is got some continuity and it's not going to be taken away from you by rules that you just don't know where they stand. So I think the first question I'd like to ask the panel is, do you think that this sector, this fast-moving sector, is ever going to be effectively regulated? And what does good regulation mean? Soala.
I think that regulation is coming because obviously we've seen a lot of things happen with the SEC in America, and whatever happens in America, usually the Western world kind of follows suit. At the moment, there are certain jurisdictions which are crypto-friendly, like the Isle of Man, Gibraltar, Singapore, Japan, and Hong Kong. And people can actually self-regulate themselves in these jurisdictions and follow a kind of in the spirit of getting regulated, so that when the regulation does come, they are already kind of used to that sphere, and they're more likely to be accepted by the regulators when they come.
So, good regulation as opposed to regulation with a hammer. What's the difference, Julian?
Well, I mean, I think in my opinion, good regulation takes into account both the economic and the technological realities. To me personally, having seen the US experience, I think good regulation is somewhere in the middle in the spectrum between no regulation, which I think makes for a very beautiful crypto-anarchist dream, but is unreal, at least in the developed nations, and taking the case law that in the US case is over 45 years old and trying to apply it to rapidly changing technology. So to me, it's government oversight and regulation that still leaves enough for experimentation and for the market to regulate itself in a sense.
Okay. Shone, do you think regulators actually understand this sector? And in what jurisdiction do you think they've got the best handle on it?
That's a good question. I think that regulators, one thing when it comes to technology, regulators are always behind technology. That is just the nature of the beast. Tech is moving forward at a pace which is ferocious, and regulators are always catching up, no matter what the industry is. In terms of what's going to lead the market out of there, I think we need to look at Washington, D.C. I think the actual full acceptance of things will come from the United States. It is the dominant banking sector. It is the dominant superpower. We certainly know that law enforcement there is being the most progressive at policing it in terms of looking for theft and crime and what have you. They are not anti-crypto. Matter of fact, many we deal are actually very pro-crypto. They are pro-technology, but they know that the laws of the land will have to be upheld. So there are cases where crypto was used in a crime, say fentanyl and 200 people overdosed, they have to solve that crime, and they're just simply following the money. And in this case, Bitcoin was the money because Bitcoin was so convenient to use. So they're not anti-crypto. So I think we're going to see a better balance of this kind of regulations coming out of there, as opposed to, say, what BitLicense came up with.
Right, because BitLicense was a disaster, wasn't it, really?
Yes. Yeah. It was very heavy-handed.
The statement,
I mean, it didn't even start with the right spirit. It started to see, well, from the point of view of how can we stamp this out, rather than how can we actually encourage this sector to grow in a conducive way.
Yeah, so from that point of view, I see like there needs to be a balance. So as Julian said, we're looking at it from a point of view that you need to have, what are the advances, what can we get out of the technology, why is it there for, what are you trying to achieve? And then look at it from the regulatory standpoint, okay, how much regulation do we need? So I'm really big on self-regulating until there becomes a problem. And the biggest problem right now is consumer protections laws. It just seems to be non-existent, and in some jurisdictions, and there's not enough proactiveness in that way to really address those concerns. So this might be where the governments want to try to step in and provide some sort of protection, or form or guidance that can help people out there.
So when you say consumer protection, you're referring to specifically people who are taking or participating in token sales, or people who are buying crypto. What kind of measures could they take and should they be taking?
Well, for example, I'm originally from Australia. We have consumer protection laws that apply to any type of company that operates, and you need to make sure that there's no way you can't really outlaw it, say it doesn't apply to you as a consumer. They have certain rights. So I feel like this needs to be a little bit more reflected in the ICO market, the ICO world, to say that, hey, as a consumer, these are your rights, and there needs to be regulation from that point of view, because right now a lot of people who do participate in these, they're quite aware of crypto, but if you've got newer people come in, that's where there's problems, because they don't know how to do the due diligence. So having some sort of guidance around that would be really helpful.
Okay. So I want to move this on to banking, because that's part of this. And I just want to ask the audience, how many in the audience, can you put your hands up if you own or trade cryptocurrencies? Wow, that's quite a number, isn't it? Goes all the time. And how many of you have had challenges or concerns when you're converting that crypto into fiat currency and putting it into your bank? Right. Yeah, I mean, without getting too much into this, are the concerns that the bank might close your account? Anyone had their account closed down? Right, okay. Okay, and that's the worry, isn't it? So what do you think, these are wonderful people. They're all law-abiding, and they're just trying to do what they want to do, and the reason why we're all in this space. So what do you think is the end game for the banks? Are they actually going to chase their customers away, or Shone?
Yeah, for what we're seeing in our industry, so we provide compliance software for banks and financial institutions and regulators, so they can risk score and mitigate this. So the technical solutions are there in the marketplace. I think what we're seeing right now from a lot of them is that they're seeing there's a lot of money coming into the space. They know there's a lot of customers they can have coming up, but they want to know that they can be compliant with the regulations. So there's no mainstream financial institution with a board of directors and an AML department who will ever accept cryptocurrency unless they can have that kind of risk mitigation software and reports that they can give back to the government. And in the case of consumers or businesses that are coming to them, what they need is KYCC. They need to know your clients' clients. They need to know, where did you get the source of the funds from? Can you programmatically provide us this information? Just give us the proof that you've done your due diligence. They're not looking for perfection. They're looking that you've actually stepped up and are attempting to stem the tide. That information is going to allow them to actually accept you as a client, and they want to accept you as a client. Yeah. We talk to them. They are keen on it, but we have to give them the mechanism to do it.
Right. So in the UK, banks have got quite a strict policy on this. So you're saying that the technology exists for them to do effective KYC, AML procedures, and therefore they shouldn't have any concerns.
Absolutely, that's definitely there, and I predict we know that certain banks want to be direct in cryptocurrency trading and be direct in dealing with this stuff as well as soon as they can. They see huge margin when you're making 80% off ATM withdrawals. They start salivating, but ultimately, these things need to be put in place.
One more question for you. Anyone work at a bank here? Oh,
He goes back close down.
Keep an eye on it.
It's okay, you can be loud and proud. Sorry.
Yeah.
But if I may add, I mean, I think one thing that a lot of folks are forgetting or perhaps not paying attention to is that, you know, conferences like this one, it's not a representative slice of society because this is the early adapters, the crypto enthusiasts, the people who are in this business. If you look at someone like Goldman Sachs, right, with probably over 100 billion in assets, I haven't looked, but I think it's somewhere near that figure, and then you look at the entire crypto market, the liability that somebody like Goldman Sachs would take on by taking on retail crypto customers versus the actual side of the market today in 2018, I mean, they're not commensurate. So, I mean, I think the banks are slowly working on pilots. It's a great thing that there are technological solutions for KYC and AML, something, for example, didn't exist in 2016, early 2017. But I think it's not that the banks are slow. I think that the way they operate until the greed overweighs the risk, I mean, we're not going to see much movement. That's why today, if you look at banks who are active in the space, I mean, you can learn world geography because they're not in the UK, they're not in the United States, they're not even in the traditional offshore zones. I mean, like, they shall remain unnamed, but a very large exchange up until very recently used to work with the National Bank in Mongolia. So, I mean, that gives you the, sense of how underbanked this entire sector is.
Right, so once the greed factor overtakes the concern about the risk, then the banks will come in.
I believe so.
So you're relying on banks to be greedy.
I think so, and I think they will, and I think.
Okay.
Yeah.
Right. Soala, we were talking before about regulation, particularly in this country. The FCA, we haven't really heard too much about what their view is of this space. I mean, they're noticeably absent. Why do you think that is?
Well, as I was saying to you earlier, I think that it's not a priority right now at the moment. As like Julian was saying, it's a small segment of the population that are really invested in cryptocurrency. But obviously this room is full and there's there's queues around the corner. And we're in Westminster and there's no representation of our government here. There's no...
Anyone from the government here?
So you see, it's not a priority for them. They're too concerned with Brexit. I mean, maybe when that finishes, they might turn their eye and see, well, what's been going on in the world. So, yeah.
Okay, and do you think that's stifling the development here of this sector?
Well, yeah, I mean, a lot of clients we get are looking more far afield, like Singapore and Gibraltar and the Isle of Man to get regulated, and that's because there's no regulation here, there's no clarity, it's a bit of a grey area. Like you said, if you open a bank account when you've just started your ICO, is your money going to be seized? And HMRC has not put any circulars apart from that you have to pay corporation tax. There's no clear guidelines at the moment, so people would rather go to a friendlier jurisdiction where they have AML policies and KYC policies, and they can actually get a license to trade. Then obviously when the UK does catch up, they'll be in the forefront of that, and it's been seen to be in the spirit of regulation. Okay,
and sort of focusing on another area, which is an important area, I know for a lot of people here and for us, there's this differentiation between, from a regulatory perspective, between different kinds of tokens, and this whole concept of security tokens versus utility tokens has been a big dividing line for companies trying to do token sales, which we're going to move on to when we talk about governance. But Sheree, describe what you see as the differentiator between a security token and a utility token, and what should you be concerned about if you're an investor and you're looking at a token sale that might be blurring the lines?
Well, this is one of those questions that you need to look at where's the company and what are the laws that apply. So for example, for us in Australia, we've already been given guidance from our governments. So it's not a hard and fast rule, but they said, look, these rules do apply, and just know that if you are undertaking an ICO, you may potentially fall under these laws. So managed investment scheme, shares, derivatives, so any sort of financial instrument. So they've given that guidance to say, we're going to take it on a case-by-case basis. But, not everyone looks at it from that way. So obviously in the US, it's really big on the Howey test and capturing people under that. So you really need to look at it. What is, the company actually doing? have they obtained any rulings from any jurisdictions? For example, us at Bitcar, we've already got a ruling from FINMA which says we are a utility token. And so these are the type of things you need to do. You need to look at due diligence, look at the structure, look at economy, and what they're trying to achieve.
And if you're outside the US, how important is that FINRA decision in terms of getting your token trading? That, Shone?
Well, I still say the U.S. leads the way, and in terms of security sales versus token sales, ultimately security law is already there. I mean, you have to apply it, and that regulation is coming for these ICOs that have sold it as a security. So, the best ICOs that I've seen have actually followed the regulation and have given that clarity. I think one of the things about ICOs that I love is the fact that it's created this frictionless system to allow anybody to invest and engage in capital markets. Where our company, for example, we did an IPO, and other companies that do IPOs, if you wanted to invest in the seed round where we're private, and before going public, you're not allowed to unless you had a net worth which was extremely high. So it was very, very restrictive in who could make money, and effectively the rich get rich. Where this is the democratization of that process. The irony with the ICOs, though, is the fact that it's based on blockchain software, which is all about this openness, open architecture, what creates clarity, when in fact many of these ICOs have no board of directors, have no governance, have no auditors, have no clarity into what they're doing with the money. It's a free-for-all, and it kind of goes in the face of what it's all about. So you need to, ultimately, in my mind, see the marrying of the two technologies, and with that kind of insight to see a really successful ICO where you've got that clarity and what have you.
Do you think securities laws are likely to change, or they're always going to stay rigid, and the token economy is going to have to adapt itself to those security laws?
I think the exchanges, and we already know there's certain exchanges that we're close to that are already adapting token stuff coming into their system, and so they're going to embrace it and become token trading platforms themselves.
Yeah, and if I may add, I mean, I think that's the key thing is a lot of people focus on the primary issuance of tokens, right? Is it the utility token, is it the security token? Folks don't really think about the distribution and the trading, which is, for example, if you take the SEC in the US, the regulators are actually more concerned and interested in what happens once there is trading, because that's typically when the retail market is the most affected, than what happens when a bunch of syndicates or high net worth individuals or crypto funds, you know, the insider crowd gets in and buys tokens, typically with a significant discount at the private sale. And I think, as you know, as my colleague was saying, for example, March 7th, the SEC came out with a circular and informational letter where they talked about exchanges at length and talked about their plans to make sure that those crypto exchanges that fall under the definition of a securities dealer are regulated the same way that a securities exchange would. And it's not just so much the legal end, it's actually a lot of things that are intended to protect the retail investors. It's what type of technology operates the exchange, how robust is it, who are the owners of an exchange, how is the pricing, you know, how does the pricing work? Because I think some of the things that unfortunately happen today in the industry, they are designed in a way, whether intentionally or unintentionally, that does penalize a small player, right? The mom and pop family who wants to go out there and buy some tokens or play in the crypto markets. It's definitely not, I think it's true. The irony is that for something that's supposed to democratize investments, it is actually probably one of the most dangerous asset classes for a retail investor to get in, the way it's structured today.
Okay, so moving on to governance, and that in relation to token sales, companies that are doing token sales, these are companies that are using this new asset class to get funds in to actually develop their business model. Now, to all intents and purposes, these are public companies because by their nature, the public is buying them. Everything that they do is in public, is in broad daylight. What we're looking at now, and what we're getting feedback, certainly from Gibraltar, is that they feel that there's levels of corporate governance that should be applied to these companies, and in particular disclosure, as in their milestones, their objectives, you know, how they're progressing, because that influences sentiment around the token. And also, you know, something that has been unheard of in this space, but is an interesting one, is insider rules. Because once you actually are talking about having information that is not in the public domain, which can impact the price of your token, not your shares, then you relate that to consumer protection, don't you? So how important, Julian, how important, I know you spoke just before, but maybe I'll show this for now. How important is corporate governance for these startups?
I think corporate governance is they need corporate governance, and it's very positive for the industry. But I think one of the pushbacks that ICOs have given us is that the over-regulation of some of these public companies, where they're stifling innovation. And in some cases, you have venture exchanges and other startup exchanges where you may raise X number of dollars in your round as you go public, and you have to spend an incredible amount of time filing and incredible amount of money. You may raise $3 million as sort of initial round, and you have to spend $500,000 to $1 million just with dealing with the regulators and the accountants and the whole 9 yards, where it becomes very, very burdensome. And so the ICO is a natural pushback to that. However, you still have to have proper corporate structure with proper governance, a proper board who is responsible for the oversight of the company.
Okay. And Sheree, say a company which is a year ago was just an idea, comes into existence, raises $30 million, and it's got far more than it would ever achieved a few years ago from a VC, more than it needs to last it for 5 or 6 years. There's obvious risk in having too much money in this case, and unless they've got the right discipline and the right approach and the right drive, then, you know, other issues are there. But, you know, that company could have maybe share capital of £500. So we feel that sort of those aspects need to be looked at. What do you think would be the right approach in terms of actually ensuring that a company is, has got the balance sheet so that effectively the funds in the shareholder base, so that the guys don't just run off with the money?
Well, I think this is like, again, it goes back to consumer protection laws. Like, there's a huge misconception as, Bitcoin, blockchain all start out as a wild, wild west. We can do what we want. Governance doesn't apply here. Regulation doesn't apply. But we've seen over time that it actually does apply. So, for anyone in that position, I think all these companies, what you're starting to see now, they've done all the ICOs, raised large amounts of money, but then they need to listen to their communities. There's already been like quite a few big backlashes from communities saying, hey, we put in money, where's the results, where's the reports, whether, if in a typical company you get,
What recourse have they got at the moment? Because as you're lawyers, these white papers are drafted with very, very clear wording on absolutely no protection at all. So,
But that's the thing, will it hold up at the end of the day? Because if you're a country that says consumer protection laws apply to you, then you already have that right of recourse, irregardless of what's written in the contract, because that would be, void in that country's law. So these are things they need to look out for. So if you're a company, you need to act in the best interest as if you do apply those laws, because they will, apply in some way or form. So, that's always good. And there's some actually really good examples of this that I have seen. So the insider trading point that you did mention. Tune, that's a music ICO. It's about to be launched, run by Gareth Emery. And what they've actually done is they've actually already outspoken in this there, said we do believe in corporate governance. And by the way, any of the founders are not actually allowed to trade the tokens for, any implication of insider trading. So I think these type of models moving forward, having, that positivity, saying, look, this is what we're going to do, set it out to the actual, future potential consumers in the industry, say, this is where our stance is, like being proactive. It's a really, really good sign. So because if we're not proactive, what's going to happen is, governments will step in, and then it might not be a good result for everyone, because again, it's going to be too restrictive, and then innovation will be stifled.
Right.
I think that there's a bit of a backwards approach when it comes to ICOs, not so much now, but I mean in the past, where they have maybe said, oh, we've got this great idea, worked on the idea, did the white paper, started raising the money, and then thought, oh, we need to be regulated somewhere, or we can't be banked. And yes, of course you can raise a load of money without being regulated, but when it comes to getting big institutional investors or being banked, you have to show transparency. And if you haven't done all your AML and gone into to licensing and regulation, you could fall to the wrath of the regulators later on. So it's better to start on the right footing, and then there needs to be a process.
Yeah. I mean, that's one of the things that we come into contact with an awful lot as advisors, where that they don't actually know what the sequence of events are, or the sequence that you have to follow to actually progress a token sale. Yeah. And if you think about things as you go along, you're not going to get there. So the interesting thing about jurisdiction and picking the jurisdictions you work is that, as the last thing you do, is a bit bizarre to us. Likewise, you know, the idea of actually not even having an NPV before you actually go out and raise money. And although that might not seem like a governance issue, it probably is, because the mindset's not right. And again, there you've got the tech companies that have got the idea, and you know, I suppose there's a requirement for them to have in the team people who understand how to run businesses, and especially businesses that are in the public spotlight. Oh, we're all agreeing. Can we have an argument? So I suppose, yeah, one of the things I want to sort of dwell on is that I could ask you each individually, if we fast forward 3 years, in your world, what do you, or your ideal version of the world, how would you like to see regulation, conducive regulation be, and what do you think that environment would work out, Shone?
Conducive regulation. Well, first, I think a lot of the token exchanges will either become much more professional and have guidelines where people doing token sales will have governance and will be acting like professional companies. And if they don't, then that role of token sale exchange will be taken over by the professional exchanges of today, because they will get into that market and will demand that. And investors will naturally gravitate to tokens that are trading on high-quality exchanges. In terms of governance and where we're going with it in terms of banks and what have you, we know that they're actively engaging and they're trying to find ways to make sure that they are compliant, and we know that they're going to get down that path. We think the U.S. will lead the way. We think they will get it right. Ultimately, it gets down to a few things. One, we need to combat money laundering. Two, collection of taxes. And it was the IRS steps in, and we have talked to them. They want their tax money. And once that gets into the system there, it starts to become mainstream, and people start to understand what it is. Now, I don't look at there's crypto economics and economics. I just call it economics. It's just a better frictionless system that's being put into place, and it will be adopted. And in terms of risk, what is the actual risk to banks? I mean, we talked about this so briefly before. Is the risk to banks and institutions is inaction, because the Bitcoin network, the Ethereum networks, these crypto public blockchain networks really represent a trust and transaction protocol change to the internet itself. And when you start to think about it from a network perspective and not a payment or a value store perspective, you understand the reach it's going to have to the 3.5 billion people who are unbanked. And it's only a matter of time before these financial institutions are going to find themselves battling the giants of Silicon Valley, who will use this new medium of change, this new trust and transaction layer, and will engage in banking, and they have the war chest to do it. They have the army of developers who have a culture of disruption and would love nothing more than take out a 600-year-old industry. They have a last-mile solution around the world. And so the problem for banks is inaction. They have to move quickly because they are right now in a pole position where they are the lead, where they have the brand, they have bankers, they have reach around the world, they have, more importantly, they have customers. And so they need to transition to being able to use these new crypto networks to get the last-mile reach before their sands are rode under their feet.
But all the noises we're hearing from banks are pretty defensive. Even Mark Carney from the Bank of England was quoting the environmental damage that mining Bitcoin is creating. I mean, I don't know. Why do you think that attitude is prevailing at the moment? And do you think we'll get through that?
I think it just comes down to fear. Like, it's something that's new. They're working on archaic systems, and all of a sudden startups around the world are just jumping left, right, and centre, doing what they're doing, but better, and providing much more. So not just transfer of money, it's actually, they're giving you the data, able to track it and all these things. And I think it's just, you've seen it in the past, it's just like being scared.
Sorry about that. That's the danger of using your phone as a prompt. I'll put it away now.
It's all right, take your call. But yeah, I think until we're able to see, everyone be able to jump on board, and there's a lot that we could do here. And for me, I always believe in collaboration. And so I think it works on both ends. So for startups to really learn, what's currently happening in the industry, and for it doesn't have to be banks, but for any industry people looking like what can the startups offer you. So until there's that kind of, harmony, we'll see, both sides being quite defensive as to their positions.
Yeah. Julian, any comments on that?
Well, I mean, I think, if you ask me about 3 to 5 years, I often draw analogies to the mid-90s, the dot-com boom. I mean, I think definitely the technology is very different, society is very different, but some things are probably fundamentally the same. So, I mean, I think we are going to see, I think we're definitely going to see a big shakeout in 2018 and 2019 in terms of ICO companies that will either merge with somebody who has an actual business or pivot, or frankly, a lot of those tokens will go out, right? Just like a lot of the .com, the publicly traded companies just went out because there was no sustainable product, there was no sustainable business. I'm not sure, what's going to happen with cryptocurrencies. I know the cryptocurrencies will stay. Is it going to be Bitcoin? Is it going to be Ethereum? We had Alta Vista, and then we had, Yahoo, and then we had Google. So, I think there's going to be a natural progression of either the current open source protocols evolving and becoming more scalable and meeting the consumer needs, or perhaps they'll go out. I definitely agree that we'll see a lot more regulated exchanges with a lot more later stage companies and tokens trading. And then I think there'll always be this unregulated, in some ways, anarchist scene that's probably going to trickle down to some fringe exchanges or much more permissive jurisdictions. And I think, that's my bet.
Okay, Soala?
I think some legislation is good, not aggressive legislation like China has done. I think there needs to be a balance. For example, Isle of Man has changed their Proceeds of Crime Act in 2014 to incorporate cryptocurrency, but the UK hasn't changed it since 2006. So there needs to be maybe a think tank or something in the future where experts in the community can speak with governors. And I think Dubai has appointed a minister of cryptocurrency. We could do with one of those here.
A minister of cryptocurrency. Any suggestions? Excellent, George Osborne. We're going to clap for that. Okay. Well, look, I think we're coming to the end, although I was given 5 minutes about 4 minutes ago. Can I thank my panelists for their contribution? Thank you very much, the audience.
Thank you.